It's no secret that China and the Communist Party have been making headlines recently. From their crackdown on the Didi IPO to the abolishment of profit in the education sector and the sudden and unexpected regulation of Tencent, China has been throwing its weight around, making sure everyone knows who's in charge. Almost overnight, investors in the United States and in the West have changed their tune, from vehement Chinese stock champions who claim that investing in China will make us all rich, to economic refugees crying woe is me after suffering at the hands of the CCP. Cathie Wood of Ark Invset has detached herself from Chinese stocks and has been dumping millions of these stocks every day, and she's showing no signs of slowing down. Now, while her reaction is driven by shock that the CCP did what she thought they would never do, there is one investor who isn't surprised by this at all. Chamath Palihapitiya recently gave us some insight into his mind surrounding these fresh waves of regulation from the CCP, and it's very hard to argue against him. I'm going to show you guys what he has to say and then break it down for you all. But really quickly, if you're new to the channel, subscribe. We're putting out loads of content just like this constantly that you don't want to miss out on.
Be careful working in China or investing in China. We're investing in Chinese companies because they could change the rules at any time and change the rules they have in the past year. We talked about, obviously, Ant Financial and Jack Ma going MIA, ByteDance's CEO and founder stepping down as CEO amid Chinese regulations and all the scrutiny. And then we have Didi last week being pulled from the App Store in an unprecedented penalty where you're not allowed to download Didi and the existing users can use it. And then on top of that, all the educational companies this week were told that they cannot operate as for-profit companies. And these companies have gone public in Hong Kong and in the West. And this has caused such an acute effect. SoftBank is clearing a bunch of its Uber position to cover their losses in Didi. There is the story of Larry Chen, who is a Chinese education entrepreneur. He was worth $15 billion in January. Now he's lost 99% of his net worth. According to Bloomberg, he founded Gaotu Techido or Techido, which is a Chinese online tutoring firm. As we know, education is huge. That company, Gaotu, peaked at $140 a share in January and has fallen to $3 a share. Big sordid story there. Tencent lost $100 billion in market cap. What do you think the end game is here?
I think what's happening in the short term is that, we have privatized free speech and we have put the distribution of information into the hands of 3 or 4 founder CEO oligarchs. That's also true in China. And when you look under the hood of the major internet companies, there's 4 or 5 guys that are in charge. And so I think that in the United States, politicians feel increasingly uneasy with those folks having power because it's applied indiscriminately. Trump gets banned, Trump may not get banned, this person gets distribution, this article is considered misinformation, that article is considered disinformation, this article is suppressed. It's a dangerous place to be. And in China, they were just like, enough's enough. So I think the short term, as it relates to the internet companies, was basically a realization that we are not going to allow any more devolution of power from the Chinese Communist Party to and into the hands of these internet entrepreneurs. So that was sort of like the...
So it's a move out of fear. They're scared they're going to lose their power base.
Not scared. I think they're just smart, and they were like, we're not going to allow this to happen. So they don't have to deal with Section 230 or any law like that. I think it was just a realization that we want them to understand who is boss, right? And so there was a wave of resignations. There was now all of this market cap upheaval. And this is now where we get to sort of like the appetizer. And I think in the appetizer, what they're basically saying is, we will control how money is made and who makes money. And I think that sets up the really difficult thing that I think happens, which is about the long term. So in this thing, what's happening right now is China very firmly telling everybody, we are firmly in control. There is no private market and there is no capital market without our approval. And that's a really big statement. I think the Chinese security authorities then had like a conference call at Goldman Sachs, JP Morgan, all these folks were invited. And, the vice chairman, basically, his quote was something to the effect of, we promise that any more changes will at least let you know. Not, hey, there's nothing to see here, or there's nothing more to come. It's just more that as we decide new rules, we'll make sure that we give you guys enough warning. So it's very much firmly saying, we know exactly how money is made. We will decide who makes money in what way. And we're going to make sure that, all of this wealth creation happens under terms that we define.
So what we heard there was a nice little summary of what is actually going on in China today and where Chamath thinks it's coming from, and it seems to be stemming from the US. Chamath believes that the excessive power of the ultra-wealthy tech CEOs of the US, like Jeff Bezos, Jack Dorsey and Elon Musk, has alerted the Chinese Communist Party to the danger of this class of oligarch. Jack Dorsey literally banned the President of the United States from Twitter, and he got away with it. The CCP have seen the power that tech billionaires can hold, and they've decided that that won't be the case in China. Jack Ma is probably the best example of this. He was seen to be too ambitious, too popular and too outspoken, so they cut him down a peg, forced him out from his companies and smacked them with huge regulations. The CCP is not taking any chances. They are consolidating power and they are doing it quickly. Chamath made it very clear that this isn't done out of fear of these billionaires, but due to pragmatism. China knows that they are going to keep getting wealthier and more powerful, and that if they left it too long, they may be unable to curb their influence in the future. China is creating a new economy. They will control the money. They will decide which companies get funded, which rise and which fall. They will decide who gets rich and who remains poor. I've seen a lot of people claim that China is doing this to fight inequality, but that couldn't be further from the truth. Evidence of this can be found by looking at how any high-ranking party member lives. They have a ridiculous abundance of luxury. This is purely about power, and it isn't going to stop anytime soon. Now, this is a dangerous market to invest in, and Chamath recognizes that. Larry Chen went from $15 billion to practically nothing overnight. Tencent lost $100 billion in market cap over the course of 3 days. If you, or anyone else for that matter, is considering investing in a Chinese company, you need to be aware that they could lose everything overnight simply because China felt like showing someone who's boss.
This is creating a mono economy, right? It's like it's going to blur the lines between public and private ownership. And it's going to basically make it one huge pot from which the Chinese government can take and put it back into as it deems fit for the broader success of China as a whole, right? So if you're a CEO and they don't like you, you're going to resign, right? If you're a company and they're worried about your propensity to be a little too frisky on your own, they'll rein you in. They'll either use cybersecurity law or something else. But the point is that I think that we shouldn't take this as free market regulators having their way. This isn't Lina Khan implementing, some laws. This is a top-down decision to nationalize large parts of the economy, starting with technology. And I know that for some people that may seem unfathomable, but if I'm a betting man, which I am, that's what I would bet on, that this is the beginning of an attempt to pull these companies in. I mean, at what David said is true. The Chinese government owns the data of Chinese companies. So at the end of the day, the Chinese government also owns the users and it also owns the revenues. It just hasn't told you yet.
Now, Chamath there does a brilliant job of explaining not only why China has started along this tech company crackdown path, but also where it's going to go in the future. He says that unlike the rest of the world where there are private markets and there are public markets, in China, there will be just one market and it will be dominated by the CCP. If a CEO is getting a little bit too big for their boots, if they're too ambitious, too popular and too influential, China will force them out of their own company, just like they did with Jack Ma. If a company is a little bit too monopolistic, if they have innovated too much, if they seem to be getting too wealthy or too powerful, China will regulate them overnight and hand them a multi-billion-dollar fine just to make sure they know their place. The CCP will control every major company in the country and will use them to build their vision of China, where the state has absolute authority in every possible way. Now, this has already begun. It started with big tech, but it's already moved on to education. And the simple truth is, there's no way of knowing which industry is next. Chamath made it clear that this is just nationalization of the modern day. This is how socialism will preserve itself in the 21st century. Socialists will use capitalism to drive innovation, to grow the economy, to create wealth and make people richer. And then they will seize the companies that generated that wealth and take back control. And despite what the China shills here on YouTube will tell you, this is the reason there is a China discount. Chinese stocks are cheaper than American stocks, but that's because they carry a far greater regulatory risk from the government. Some people will determine that their growth prospects and their discounted price are enough to justify investing in Chinese stocks anyway, but most of us will stay away. Personally, I will never invest in a Chinese stock due to my moral concerns. I do not want to invest in a market that stamps on democracy in Hong Kong or tries to erase an entire culture in Xinjiang. And no matter how much money might be up for grabs, it will never be enough to convince me otherwise. If you're new to the channel and you enjoyed this video, then make sure to subscribe. If you want to help spread the word, then consider liking the video and leaving a comment, and YouTube will do its part by pushing this video out to more people just like you. There are links down below in the description where you can get a guaranteed free $25 from crypto.com, up to $250 in free Bitcoin from BlockFi, and up to $2,300 in free stocks from Webull. There's also a link to my favorite brokerage called eToro that I use most of the time that you can check out as well. Thanks for watching. Until next time.